All right, folks, you're not going to want to miss this one. We got the Ripple Treasury flipping the switch. Trillions of dollars confirmed on the sideline, ready to deploy into this asset class. And at the very same time, we're going to be talking about another asset class, silver, which on average has done over 300% during the last Fed interest rate cutting cycles. Now, speaking of the precious metals, I'm going to start out this episode by showing you guys what's up with gold. As always, all of our community resources are available at zachrector.com. If you need the precious metals, if you need to roll over a 401k retirement account, let's help you out. We got exchanges, wallets, and if you want to sign up for my private group, we have that available for you guys as well. We've been talking about this asset, and it is officially closed 4 days above the $2,500 mark for gold in US dollar terms. We're going to see if we can do it, keep the streak going. We have Friday of last week. We closed Monday, Tuesday, and the Wednesday candles all closing above 2,500. And we're going to be watching this Thursday candle very closely. Can we keep the streak going? Silver, just shy of 29.5. And like I said, if you need some, we got it. You covered. It's at zachrector.com. Take a look here. I got 2 data points on gold and silver that I find very interesting right here. From Jesse Colombo, who is the director of marketing for North America for Bullion Star. Huge shout to Jesse. This is an interesting thread right here. He points out, though gold priced in US dollars has broken out of its summer consolidation pattern, it hasn't broken out in most other major currencies. Because of that, gold's breakout doesn't yet have the momentum or staying power that it will have once it finally breaks out in all major currencies. I believe that gold is close to a breakout in all major currencies and that this will kick off a much more powerful phase of this bull market without the frustrating choppiness we've been seeing this summer. Well, us in the XRP community, we're used to that choppiness, so nothing new for us. And the precious metals community, nothing new as far as having some patience, waiting for an asset to move. Gold has just been ripping though, but I think this is so interesting to see right here. We got the breakout in US dollars, but not in euros. We have not broken out in euros, haven't broken out in British pounds, haven't broken out in Canadian dollars. Well, we just started. It recently broke out, but without much gusto just yet. Let's watch that against the Canadian funny money. How about the crazy Aussies in the land down under? Well, we haven't broken out yet there. Now, in terms of the Chinese yuan, this is a very important one because China is a major driver of gold's bull market, and it hasn't broken out yet. But Jesse says that he's betting that fireworks are going to happen once it does. The other one is gold priced in Japanese yen. Didn't break out yet. That's going to be interesting to watch as that Japan carry trade unwind occurs. Now, we also have in the Hong Kong dollar, it recently just broke out finally. Against Singapore dollars, it didn't break out yet, and Jesse knows that this is very important because Singapore is a regional gold trading hub, and it is expected to become even more influential in the gold arena. To summarize, gold's summer breakout is in its infancy, and it needs further confirmation in the form of it breaking out in the major currencies I showed in this thread. I believe that gold fits and starts over the past few weeks is partly explained by the lack of breakouts in all major currencies. Consider that a form of breadth, if you will. I also view that prospect as a reason for optimism once the breakouts occur across the board. The other factor to consider is the very light trading volume during the breakout in US dollars over the past couple weeks. That can partly be explained by a summer trading volume that's always a summer slowdown in the precious metal space and in the stock market as well. But I really want to see volume pick up in a big way to confirm the breakouts. Okay, we'll be watching that closely. For silver, this is from Peter Croth. Silver gained more than 300% on average in the last 3 rate cutting cycles. Are you ready? You guys let me know in the comments down below if you're ready for this one right here. And can we get a little bit more zoomed in? Maybe not, maybe. That's unfortunate. Because, you're not really getting a good look at it right there. There you go. That's probably the best look I'm going to get you right there. Now, during this run-up right here, after 2000, 400%. After the 2007 to 2008 Great Financial Crisis, well, actually, it was longer than that, but during that cycle, it was 441%. And then after 2020, we saw 143%, and that rally's ready to continue a little bit further, isn't it? So during this rate cut cycle, are we going to see 300%, 400%? 2020, we saw 143%. From the current levels, if we just doubled up at 100%, obviously that's taking us to that $50 to $60 silver. You guys let me know what your silver price prediction is in the comments down below. Let's get into crypto. This is Matt Walsh commenting on Prometheum. And what's so funny about this one, Prometheum, remember, they came out as the first crypto asset security platform, custody platform. And what was the first token, the first crypto asset security that they offered their services for? Ethereum. And now everybody's getting mad at them because they've gone forward and they're expanding their securities custody list to include Uniswap's Uni token and Arbitrum's ARB, even as Uniswap insists that Uni isn't a security. Now, Matt Walsh comments here, says Prometheum is up to its old tricks, trying to tee up the SEC to take action against Uniswap and Arbitrum in the same way they did with Ethereum in June of 2023. Meanwhile, Prometheum is in disarray. This is an interesting thread on Prometheum. For those not up to speed on the original plot, refer to the thread below on the Prometheum background and business partners. It's all shady. I'll summarize for you. By now you know that Ethereum is not a security. Well, do we? Do we? Do we know that? Are we sure about that one? Uh-oh. And Prometheum has no business model. As Congressman Richie Torres says in his letter to the SEC, this is nothing more than a Potemkin platform. I've never heard of that. I don't know what that means. You guys can let me know in the comments. Prometheum is in dire straits financially. Their 2023 financial report indicated that they could support operations for another year on their ATS. That clock is ticking, though. Time for a capital raise. Can't raise it yourself, so let's go find a banker. This time, probably better to avoid Network One Financial, too many SEC violations and questionable affiliations. Enter Aegis Capital, who has been contracted to raise Prometheum $20 million in exchange for $2 million plus a 3% expense buffer. Pricey. These guys must be awesome. Weird. I have never heard of them, though. Well, according to BrokerCheck, maybe not so awesome. 38 disclosure events for a laundry list of infractions that you can read more about below. In conclusion, Prometheum should spend more time finding a real business model and less time harassing Arbitrum and Uniswap. Now, as I mentioned, what I find so hilarious about this is Prometheum came out and they got everybody all upset because the first crypto asset security that they offered was Ethereum. And now they're going forward trying to offer Uniswap and Arbitrum. And this left the rest of the crypto space wondering, where the heck did you guys get this understanding? Because you were the first SEC sanctioned crypto asset custodian platform that got, sanctioned and signed off by the SEC. In your first crypto asset securities, Ethereum, now you want Uniswap and Arbitrum. Where are you getting this from? Is the SEC giving you, like Joseph Lubin had, a little note that he kept in his pocket? Is that how you guys are getting your pass, right? Your level of clarity? Where is that coming from? Now, it seems like Prometheum, shady past, shady background. The CEO, he looks like a villain straight out of an evil movie. And he's playing that role pretty perfectly right now. You guys let me know in the comments what you think about this situation. I'll tell you what I think about Ripple Partners. I just continue to see a common thread across the board, a theme that they're all expanding. And what we see here in this news is that they're becoming partners between the two, both partners with Ripple. D-Local has been a longtime RippleNet partner. And Uphold was just recently announced and added to the on-demand liquidity network last year. We talked about that with Simon McLaughlin, the CEO of Uphold. But now they're going to be expanding payment flexibility in emerging markets. D-Local, the leading cross-border payment platform specializing in high-growth markets, has joined forces with Topper, a service from Uphold known for its multi-asset digital money platform. Remember, Topper is a platform offered by Uphold to allow folks, it's a fiat on-ramping platform, trying to make it easier for folks to on-ramp into digital assets. This strategic partnership leverages D-Local's extensive payment processing expertise alongside Uphold's innovative financial solutions. The collaboration aims to enhance financial accessibility across emerging markets, targeting regions where traditional banking services are less prevalent and the reliance on alternative payment methods is high. The partnership will enable Topper by Uphold to introduce bespoke payment solutions in Latin American markets such as Brazil and Mexico, including specialized bank transfers in Chile and Colombia. This initiative is designed to overcome the limitations posed by conventional payment methods, broadening the scope of financial services available to consumers in these regions. By integrating dLocal's robust payment infrastructure with Uphold's expansive financial network, the partnership promises to offer a more inclusive financial ecosystem that caters to the unique needs of users in emerging markets, emphasizing the importance of localization in financial technology. Robin O'Connell, the CEO of Enterprise at Uphold, said, quote, enabling our users to access local currencies and offering a variety of payment methods is crucial to our mission of providing accessible financial services to everyone. So it looks like Ripple, these are both Ripple partners, right? Uphold got added to the on-demand liquidity network. And the reason why that was a critical one is because Uphold is just a great source of liquidity with all of their relationships. And then with this product Topper, it's an ease of access for on-ramping into crypto. And it appears that they might be adding more local currencies through this partnership with dLocal. Looks like to me a match made in heaven, which is the case for a lot of the Ripple partners. And speaking of Ripple partners, where a lot of the Ripple partners are going to be getting together is at Ripple's Swell Conference this October in Miami. Now, Ripple just announced the speakers list, or the first tranche of speakers. And of course, it is a stacked lineup. We have this one, which is so critical. New York State Department of Financial Services, Adriana Harris, the superintendent. Remember, this is where Standard & Custody has their trust license signed off by the NYDFS, right? Ripple acquires Standard Custody and Trust. Ripple's getting ready to launch their stablecoin. Where are they going to keep their collateral? Well, they don't have to rely on a bank or a third party. They can do it in-house with their Standard Custody and Trust company that has been signed off by the New York DFS. Continuing on, we have the former chair of the FDIC and founding chair of the Systemic Risk Council, Sheila Bair. We have global head of blockchain and digital assets at BBVA, another Ripple partner, Francisco Morato. Philip Martin, chief security officer at Coinbase. What do we got cooking over there? Coinbase showing up. Okay. Tim McCourt, senior managing director, global head of equities and FX at Alternative Products at the CME Group. Remember, we just had the index go live. We just had the futures market go live. What comes next? That would be the ETF. Well, that's just the first tranche of speakers. There's more there. And this is where all of the partners are going to be getting together in Miami. Ripple's going to be taken over. And what's going to happen between now and then? And what is Ripple going to announce at that Swell conference? I think one of the things that they're going to be talking about is the fact that they've flipped the switch and fired up that Ripple stablecoin. That's right, folks. Take a look at it. So it begins. 185 RLUSD minted at the RLUSD Treasury. Now, as I've been saying in regards to this Ripple stablecoin, it's great to see they've been doing testing. We've been watching, and this is a great thing about blockchain, right? Is it's so transparent. We can watch all these transactions on chain. And so we've been watching this over the past couple of days, and we've been starting to think, okay, looks like they're getting ready to fire it up. They officially have done this. But the main point that I've been saying about the Ripple stablecoin and the competitive advantage, not only do they not have to rely on a third party or a bank to custody the assets that would expose them to counterparty risk, they have no counterparty risk. Their assets are going to be safe at Standard Custody and Trust. The other aspect of this, though, is that Ripple has a lot of XRP. If you didn't know that, right? This probably isn't news to anybody, but you need to consider this fact when you are, factoring in your equation of what makes Ripple one of the premier stablecoin issuers in the entire space. This is going to give them another advantage, having that XRP on their balance sheet as well. Now, as I've been saying, are they going to come out and say directly, oh, we're backing Ripple stablecoin by XRP? No. Just like the United States doesn't have to come out and tell you that they're backing the US dollar with the largest military known to man. It's just kind of inferred, right? Everybody kind of understands that. It doesn't need to be announced. Well, in that same manner, Ripple doesn't need to announce that they're backing their stablecoin by XRP. Everybody knows that they have XRP. Everybody knows that they have cash. Everybody knows that they have a trust company, another custodian that they acquired in Medico. We know that they have plenty of cash. They're in a great position. And you put all this together, this is why I'm saying that Ripple has the potential, even if they achieve what Tether's doing, you got a cash flow stream of revenue there for Ripple, a stream of cash flow that can equate to $5 to $10 billion per year if they just achieve what Tether's been doing. I think they can do a lot better. You guys let me know in the comments down below. But the Treasury is live. And as I've been saying, when you compare Ripple's Treasury versus Circle's Treasury, Circle can't custody their own assets. They had to rely on banks like Silvergate that went bust and exposed Circle to $3 billion of lost collateral. Whoops. Don't get me started on Tether. You guys already know that deal. Now, this takes us to the final point that I wanted to say in today's video, which is that we're getting this confirmed over and over again by the largest managing partners, hedge funds, and institutions in the world. The fact remains is that there's trillions of dollars waiting on the sidelines and waiting for clarity. This is Bart Stevens, founding and managing partner of Blockchain Capital, says that there are trillions of dollars waiting on the sidelines, waiting for clarity. He also noted that he was an earlier investor in Ripple. This was at the SALT conference in Wyoming. I'm going to play just the first 60 seconds of this clip. Listen in.
Regulations, because there is trillions and trillions and trillions of dollars on the sideline that's just waiting for some clarity. I sometimes go in and I'm pitching these very conservative organizations like a bank or a sovereign wealth fund, and they're like, well, Bart, why should we have any crypto at all? And I'm like, I think it's super irresponsible to have zero exposure. Like, so let's talk about sizing of a portfolio. And if you want to buy Bitcoin, fine, or Ethereum, fine, or if you want to invest in one of our funds, that works too. But this is the fastest growing asset class in tech in history. If you want to look at Bitcoin or Ethereum and all the related companies like Kraken and Coinbase and Ripple and Anchorage and others, disclosure, I'm an investor in all those companies. It got first to $1 trillion, faster than Meta, faster than Google, faster than Apple, faster than Cisco. And this industry is here to stay.
And notice how this goes from they hate it, they bash it, it's criminal activity, nothing to do with it, to now it's irresponsible to not have any exposure. And first it goes to, half of 1% allocation, to 1% allocation, to 5%, to 10. I mean, we got some folks that are coming out and talking about they've gone to 20%, 50%. I mean, they're trying to catch up to us. Some of us are, pretty deep in crypto, right? I'm not going to give you financial advice or tell you what percentage of your portfolio should be in crypto, but the point remains there is trillions of dollars waiting on the sidelines to deploy. And remember, this is capital that'll just be parked. But then we also have trillions of dollars of liquidity that's ready to move to these DLT rails as well. So this is the perfect setup as we're brought into another liquidity expansion cycle through next year. No matter who gets elected, that money printer's getting turned back on. And so this is where we're perfectly aligned, just like some of these other managers and hedge funds and institutions that are ahead of the game, partnering up with Ripple. We covered some of that here. And they're starting to adopt and they're starting to pick up bags. And a lot of them are doing it on the low, right? Where they talk their book. They're talking it down while they're picking it up. And then when they're talking it up and they're telling everybody how to, remember when CNBC was telling us how to buy XRP at the peak of 2017's bull run, that's right before XRP and the broader crypto space corrected, right? So when CNBC and Jim Cramer are telling us to, showing us how to buy XRP this time around, that's when I'm going to be maybe taking some profits. But I'll keep you guys up to date on that. For now, there's still trillions to come in. And you know what this is going to do to our space. If you like how that sounds, make sure you guys smash the thumbs up on this video. Help me out by sharing it out far and wide. Everything's at ZachRector.com, and I will see you guys in the next one. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.